All right, everyone, here we are with ticker symbol SRNE, Sorrento Therapeutics. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So Sorrento has been in a bearish run since October 13th, and it had a pretty hard fall. And since then, it's been struggling to hold itself up, and the bulls have slightly reappeared here. It looked like there was a recovery, and the bears have just continued to pull this down. But when you look at it a little bit outwards, that steep fall has actually slowed down since the 20th, about 6 days back, earlier last week, towards the end of the week, and it's been in a sideways movement. So there could be a change of trajectory here if the bulls actually load up on stocks and bring in a hefty load amount to go ahead and buy stocks and bring this one up. So right now, the bears are slightly dominating. The tug of war is still there between the bulls and the bears. It's going up and down through the 50-day moving average, but right now we're in bearish territory. Now, the bears can lose control quickly if the bulls come in hefty and strong. Like I said, they can go ahead and load up on stocks and bring this one back up because we're pretty close here. But if the bears break through support, their goal is going to be to hit newer support levels and tear this one down back to the lowest points that it reached, which was down here at 770. I'd keep that in mind. That's the lowest point reached in this bearish run. If that gets broken through, this could hit newer lows. On the other hand, one of the highest points in the slight recovery was up here at 836. I'd write that down. If that gets broken through, the bulls can start to hit newer highs and newer resistance levels. But let's zoom in and see what's important for tomorrow. So right now it's currently at 791. The bulls need to break through 794, which is the first resistance level, turn that into a support, and pull away from it. Obviously, their true goal currently is 805. That's the 50-day moving average. When we're below it, we're in bearish territory, and when we're above it, we're in bullish territory. So the first step for the bulls is breaking through 794, turning that into a support, and breaking away from it to get closer to the 50-day moving average to start to work their way up and get into bullish territory. So super important for the bulls to keep that in mind. They need to break through this resistance level, 794, turn that into a support. Does not signify that they've gained control. It's just an indicator of where this is going, and if they can pull away from it, they're getting closer to their goal, which is the 50-day moving average, which will then get them back into bullish territory, and the bulls are going to try to hit newer highs, new resistance levels to pull away from that 50-day moving average in an upward direction. Now, on the other hand, we have what the bears want. The bears want to break through support, and that is 781. That's the lowest point reached in the day. And again, the lowest point reached in this bearish run was 770. That's 11-cent difference. So I would see the behavior of how this is reacting between 781 and 770. But just to emphasize to all investors, if this breaks through 781, this is pulling further away from the 50-day moving average. We're already in bearish territory, and that's just confirming more control over the chart for the bears. So 781, I want to emphasize, pay very close attention to the behavior of this stock. How is it acting, and how quickly is it hitting newer lows and pulling away from the 50-day moving average? Are the bulls even trying to reappear, or are the bears just dominating this one and bringing it down? So 781 is our support level and one of the most important numbers to pay close attention to as this plays out tomorrow. We're currently 10 cents away from that, and we're 11 cents away if this breaks through support from the lowest point reached in this bearish run. As always, I hope you guys found this video helpful and informative. If you guys did, please do so and subscribe. If you're a first-time viewer and investor that feels inclined to, please do so. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit that like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up and all the way to the last candlestick of the 6, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.